In this video, I'm going to talk about how to get a bigger stimulus check if you didn't get the full amount on the first round, and if you don't think you're going to get the full amount on the second round. And I'm also going to show you how to qualify for more deductions and more credits to get more money back in your pocket. Now, this is for small business owners, independent contractors, and even W-2 employees. Just about anybody can use these strategies. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner, helping you reach your financial goals. So yesterday's video, I talked about the 401k distribution strategy and trying to figure strategies on how you can take money out of the 401k to offset some of the income. So if you had a dip in income this year, how to put that income into this year and take it from future years. But the CARES Act really limited to the amount of strategies that you can use with those 401k distributions by forcing you to use either all of it in year one or spreading it out over 3 years. Now you can watch the video to see more on the technical side of what the CARES Act and the 401k could do for you. But I'm going to talk about a strategy today to help you change the way you think about retirement plans and controlling your taxes. Now, one of the examples we're going to use is the stimulus check. And the reason I'm using the stimulus check as the example is because it's not a recurring tax credit. So if you didn't get the full amount in the first round, I want to make sure that you're going back and maximizing the amount you could qualify for. And if you think we're going to have a second stimulus check, also to make sure that you're qualifying for the second round of stimulus checks. And it's a tax credit. It works a lot like the other tax credits. So I want to make sure that you're maximizing the dollars that are going back in your pocket. And the reason it's so important to look at this strategy in advance today, not tomorrow, is because once December 31st passes, for most people, you're not going to be able to use this strategy. But you can also plan today to make sure that you can still use it after December 31st. Now let's start with the stimulus checks because it's on everybody's mind, and we might get a second stimulus check, which would make this strategy so much more important to pay attention to. So for married filing jointly, the phase out is from $150,000 to $198,000, but that's if you have no kids. It goes up from there by $10,000 per child for the complete phase out. So if you have one child, it's plus $10,000, 2 children, plus $20,000 for the complete phase out. But the lower you get that income, the more stimulus money that you're going to qualify for. Same thing if you're single. It's from $75,000 to maximize it all the way up to $99,000. Now, first I'm going to talk about the W-2 employee, and I'm going to get to the independent contractor, sole proprietor, small business owner in just a minute. But if you're a W-2 employee and you have a retirement plan at work, such as a 401k, 403b, 457, you could still make contributions into those plans. Now, doing so will reduce your adjusted gross income, which is what you need to qualify for any of these thresholds. But it's not just about saving. You also want to make sure that you're figuring out where your income is going to land, and then make sure that you're not putting too much on the Roth side and missing out on free money. So on the one hand, you can make the contribution into the 401k to reduce your income, and you want to pay attention to the income limits, especially for the stimulus checks. But on the other side, let's say that you put money into a Roth IRA. You could still convert those dollars and recharacterize the contributions that you might have already made for 2020 and put that into a traditional IRA, or pull the money out if you have a retirement plan at work and you don't also qualify for contributions, pull the money out of the Roth IRA and just up your contributions on your 401k side. Now let's look at the other side for the small business owner for just a minute. Let's say that you're a struggling small business owner and you can't make the contributions to any retirement plan, even if you have one. Well, here's what you could also think about. You can make those contributions for 2020 all the way up to extensions in 2021. Now, normally the employee side contributions have to be made by December 31st, but you also have the opportunity to make a profit sharing contribution depending on what type of plan that you have. And that can carry all the way through extensions. Now, here's one of the most important strategies for a small business owner. If you don't have a retirement plan, what you must do is have that plan opened by the deadline of the type of plan. So if it's a solo 401k, you have to establish it by December 31st in order to make those contributions for 2020. And you're not obligated to actually make those contributions. So if you're unsure whether or not you're gonna be able to actually make the contributions at any point, it still makes sense to open up the retirement plan for your small business. And if you're a sole proprietor, you can still do this. You just wanna make sure that you're paying attention to the deadlines. So even if you get into 2021, you could still look back and make that contribution and qualify for the additional stimulus money. And these strategies don't stop with just a stimulus check. It's just a great example because you can only get it this year. What also qualifies is the child tax credit, the saver's credit, or even your health insurance if you get it through healthcare.gov. And I can't tell you how many people don't realize that it's important to pay attention to their income, even for their health insurance. So let's look at the calculator really quickly. And this is a calculator that I've used in other videos. And this is on the healthcare.gov site, and it shows you what the income limits are to qualify for additional assistance on your health insurance. For a family of one, if you're single, I chose Florida because I'm in Florida, and you can see the income thresholds. So if you make above or below $51,040, then you would qualify. But I'm a family of six, so if I put six, and I have my health insurance through healthcare.gov, that means I have to get my adjusted gross income below $140,640 in order to qualify for additional assistance. And going back to the stimulus checks, if you had adopted or you have a newborn, guess what? You might also qualify for additional stimulus money when you file your 2020 taxes. There was even a proposal to get the money earlier on for new parents receiving CARES Act stimulus checks this year, but that didn't go through. So you still have to do your 2020 taxes in 2021, and hopefully you'll get that stimulus money. And this also goes with distributions. It's not just contributions to reduce your taxable income. It's also on the distributions. So that 401k distribution strategy that I talked about in the last video, if you need to tap your 401k and take money out of that 401k, you want to be sure that it's not pushing up your income over that certain threshold so you miss out on free money. And using this same logic, it's not to say that the Roth IRA isn't a great retirement planning vehicle, because it is, but you want to make sure that you're balancing it correctly. So in some situations, it might make more sense to put some money into the 401k and then switch it over to the Roth IRA and have new contributions go into the Roth IRA. It depends on where your income is going to be and what you could possibly qualify for. Now, let me know in the comments down below if this made sense to you, if you can apply this strategy, or if you've already applied this strategy. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.